Mabyanine Phiri is with ACM Gold and Forex Trading. He joins me now in studio to take a look at the global economy. Thank you very much for joining us.
Thank you so much.
Let's start with the US economy. We see it's picking up. The industrial output information that came out on Friday reinforced that the US economy is picking up. Does this mean that interest rates are going to come sooner rather than later in the US?
Well, yeah, there's definitely been a major improvement in the US economy. They've been reporting good data from the employment sector. And the Fed did indicate that as soon as they get consistent numbers in this employment figures and the data, then they'll start considering raising the rates. But nonetheless, I don't think right now, in terms of timing, just looking at the global economy, they have to be very careful. And my prediction is that probably later next year or even early 2016.
Now, we know that the Federal Reserve came out with a statement on its monetary policy recently, but they're due to put out a statement this evening. What do you expect them to say that's any different to what they said last time?
I don't think there's going to be much of a difference. I mean, the buzz around the world is when are these rates going to go up? And it's very difficult to read from the statements and the meetings as to when this is going to happen. So I think there might be new clues, but I doubt that anyone could actually predict, or there'll be information that could give you an advantage to predict when the rates are actually going to go up.
Now, before you came here, you were in your office looking at your screens and seeing that emerging market currencies were being sold off like crazy. Why today? What's happening?
I don't think there's one particular factor that we could attribute to what we've seen this morning, but I would say it's a combination of factors, and I do believe that although it's good news that the oil price is going down for globally, actually, I feel that that and other factors are contributing to this sell-off. And also just generally the US dollar is strengthening, so we're seeing quite a lot of capital flights happening in the emerging economies, and investors just rushing to the US where there's robust growth, whereas emerging markets have been struggling for most part of the year, even up to now.
The dominant story today is obviously the Russian ruble plummeting. It seems to have no floor at the moment, and the Russian central bank keeps on trying to intervene, spending about $2 billion a day or something to prop up its currency. Is this a wise strategy, and why are they in this mess in the first place?
I can't comment on whether it's a wise strategy, but just looking at Russia, they're caught in a very difficult situation. I mean, Russia is known for its exports in oil and a leader in gas as well. And we've seen those prices plummet this whole year, a considerable plummet, in my opinion anyways. And that, in combination with the sanctions that they've been receiving from the US and Europe, that has just crippled the economy and subsequently the currency, ruble.
The oil price, you touched on it, keeps on falling, keeps on falling. OPEC says they're going to wait 6 months or so to see if the price stabilizes. I don't know if you're willing to comment on whether that strategy is sensible, since if they don't cut production, then there's going to be this glut and oil could possibly reach zero. That's
correct. And I think the strategy here is to cut out some of the producers that might not be able to withstand operating at their current levels. And I feel, I mean, it's very simple. There's just too much oil and too little buyers. And just looking at the global economy and the major economies like China that used to consume a lot of this oil, not growing as expected. And I feel that in the long term, I feel that oil prices will stabilize, but in the meantime, I think we'll continue seeing this plummet.
What about the rest of the commodity complex? Prices there are also under pressure. Is that strictly a China slower growth story, or is there more to it?
Mainly it is China. It has to do with China. I mean, we've seen even coal prices, gold price going down, and China is a key driver when it comes to commodity prices. And I feel that apart from that, also the whole global growth outlook, I mean, it's been readjusted, and the global economy is actually growing at a very slow pace. And I feel that those two factors are probably contributing to that the most.
All right, thank you so much for your time. That's where we're going to have to leave it there. That was Mabyanine Phiri. He's at ACM Gold.